Hi, welcome to Market Alert for Tuesday, 20th of August 2019. So yesterday the news is global easing hopes spark biggest stock short squeeze in 7 months, which basically means that they're expecting higher prices from the shorts being squeezed, puts the pressure on, and the market will then move higher. So let's have a look and start off with the Dow. We'll start with the daily chart. You can see yesterday the market trading up to the 76% retracement that we drew in yesterday. Market's got these highs just over to the left to negotiate next, and also the 20 bar moving average if it's to move higher. Just one problem here, market's going up on fresh air, but that's not uncommon given the manipulation to move the market back to the upside as much as possible. So watch the resistance at this level, 26,395. On the intraday for yesterday, we see the market moving higher in the pre-market session, up 100 points there. We see that comfortably, just over 100 points up. And then we've got resistance to the left there. So I'm just having a look to see if we had more than I'm actually saying there. So we actually moved higher, yeah. So we're 150 points. I've got 100 points there, and then another 50 on top, or just over. So yeah, good 170 points there. So then the market opens, we see some selling because of the resistance we've got to the left. Big spike in volume here as a precursor. So when the market traded back up into this area, the selling came in. Where did the market stop? Right on the 200 bar moving average yet again. And then prices moving slowly back to the upside, over 100 points back off the 200 bar moving average there, having had the short trade but not for long. And then we had a bit of a sort of triple top there, bit more volume here, and then the market closing back below the 200 bar in the early parts of the overnight, and then finding support and currently moving back to the upside, which we see in the daily chart there. You can see now again the price action is the sort of price action that will move through this price bar. There's no news to talk about today. FOMC Quayle speaks, medium impact news item. They've all been sworn to silence, actually, according to a report I read the other day. So don't expect much from this. However, on Thursday, well, we've got the FOMC meeting minutes tomorrow. There could be a surprise announcement at 7 p.m. This is just a review what was said last month. It's not the major one as we would normally have with the rate forecast. There's nothing down here to say that they're going to reduce rates, so there could be a surprise one. Seems slightly odd, I have to say. But Friday, Powell is speaking at Jackson Hole. It's the day 2 of the Jackson Hole Symposium. I was just looking then, I was thinking, why wasn't he speaking on Thursday, day 1, but he's not. They bring them in on the second day. So we'll see what happens at 3 p.m. on Friday as well. It's a closed meeting, no press, everything's in secrecy, and they will release the odd bit after they come out, but don't expect too much as far as what really went on behind the closed doors, a bit like the Bilderberg Group closed to the press and everybody else. So all of the central bankers will be meeting in Jackson Hole on Thursday and Friday. While we're here, implied volatility dropping yesterday on the Dow as well, down to the 20 bar moving average, heading up to the 20 bar moving average here. This in more detail, you can see that we went from 1772 down to 1554. Does it mean that the down move is over? Not at all. If we look back here, we can see that the implied volatility closed below the 20 bar moving average there, only to see another spike to the downside. It's all going to be Fed dependent, and what Trump tweets out as well. So let's go back to the markets. Let's have a quick look at the pound. This moving lower off some potential weakness. So we had some buying pressure come into the market, didn't hold, and then it was slammed through. Probably to do with the Project Fear comments that have been around saying that we're all going to starve and everything else after if we do leave in October without a deal. However, the market then shrugged this off and the prices moved back. As I said, you can expect a dead cat bounce anywhere around this sort of level at the moment on the 20 bar moving average. There is weakness in the background for this market. And finally, in Bitcoin, we saw this move higher yesterday. I spoke about this at length in yesterday's market alert. So let's just have a look at this in a bit more detail. As I said, I'd try and do the trade after recording the alert and managed to do so. So let's just have a look. This is the recorded price action, the market putting in the signals. I'm going to fast forward here because it took a few hours. So we kicked off with the order being filled, and I'm just going to wind back a bit here because I want to show you something that I did on this chart which you wouldn't have seen. Right, so what I was doing here was having a look at the 200 bar moving average in the 4 hour that we spoke about and said that we needed to break through here as well. So what I did was get a ballpark figure of where the price was and then drew a line on the chart just so I could see if this was going to be a resistance area. It was also the high for Sunday as well. So I'm going to fast forward because, as I say, it was a long job. You can see the market then driving through here. Lots of buy signals added to this as well, straight through the R1, and then it was just a matter of moving the stops to break even. Whoops, just bring that back. I thought it was a regular chart, but it's not. I'm going to do this a bit different. So move the stop to break even. The scalp is in there. Give it some room to breathe. We're through the 200 bar moving average in the 4 hour chart. And then it's just a matter of trailing the stop, which you'll see as prices continue to move higher. I was keeping an eye on the R2. At this stage, there was some weakness around. The volume had dropped off. So what I did is test to see if the 76% would hold. And again, as we move forward, you'll see prices come up to the 76% retracement. Have a look at it. I then, as it did this, I had a look at the high just to see if there was going to be any sort of momentum, but the volume increased slightly, but nothing of to shout home about. And then you'll see prices eventually coming back and me just moving the stop until it is taken out, which you see there. So going back to the main thrust of Bitcoin prices moving higher yesterday, here you can see it going through the 4 hour chart and the resistance levels that we drew in yesterday. The market stopping at 10,945. We can get rid of this one and this one just to make things look a bit cleaner. And then overnight, you can see what happened after, by the way, when I got out of the trade. We started getting these spikes. Didn't do any more trades because, as I said yesterday in the market alert, that was an explosive pattern that was lining up for this market, and it remained sideways for the rest of the day. Meanwhile, overnight, prices managed to break away from the two moving averages here. See the spikes in volume here, driving prices higher, and then we get the selling coming into the market, failure to close above a 76% retracement, and prices moving back there. Let's see what support comes in, but the 200 bar quite a distance away, but I'd like to keep an eye on that just in case we sail back to the downside during today's trading session. Okay, last couple of things. Let me just realign this. Deutsche Bank managing to still move to the upside, very narrow range for yesterday, but talk about bouncing off these lows here, a bit of a miracle on Friday for this market. And then finally the yields, we remain inverted on the 3 to 10 month and also as far as these are concerned as well, these are all totally inverted and partially inverted. So we can see that there's a lot, at least 50% of the globe heading into inverted territory or partial inverted yields, and we all know that it's a precursor to a coming recession. Okay, that will do it for this one. It's a bit of a slow news week this week, as I say. It starts to liven up a bit Thursday and Friday. Wednesday, not Friday, certainly Wednesday, tomorrow evening, 7 p.m, see what the FOMC minutes say and see if there's any sort of emergency release of anything. There was a tweet sent out yesterday by Trump saying that Powell should cut 100 basis points and start QE again to avoid recession, but it's too late. The yield curve is already inverted, and it's inverted for a reason, because of the cost of borrowing in the short term, which, as I said before, is the catalyst for a coming recession, an indication that all is not well. Okay, that will do it for this one. Thanks for watching. See you in the next